In Chakri, very good morning to you. What are you looking as the big bet today? Are you gung-ho on IT after Accenture?
Good morning. Thanks for having me. I think, yes, IT is that way the least risky, least resistant path to invest. Simply because we know that once Trump is in early next year, lots of corporate benefits, which will lead to that IT spend. And, Accenture results are also a good indication. And the valuations are definitely on our side, both large cap and mid cap.
Okay. Sorry, Chakri, did I say that valuation in mid caps also you believe are on our side? And if that is the case, is that the pond you're fishing in, or are you sticking to the larger pond?
No, definitely fishing in both the ponds because the Infosys HCLT, as well as the Mindtrees of the world, persistent. And also the Er&d companies. Now, the Er&d companies, there is going to be a revival of that spend. So that whole space, I mean, their multiples naturally are higher, but they have a higher growth too. So clearly both.
Er&d, what are you liking, Chakri? Because this is the second time in the show this morning that there has been a thumbs up on Er&d. What specifically do you like there?
KPIT, it looks good. There's a company which has actually quite corrected quite a lot in the recent past. And if you look at it on a earnings growth potential basis, there's more than sufficient room for the stock to re-rate.
Okay. So that's Chakri Lokapriya's fishing pond. For the day, Kush, where are you fishing? And couple that up maybe with a view on the Bank Nifty, because we've still to do that. So Bank Nifty, and then your specific stocks where you are fishing today.
Sure. So, we know the FII selling has actually, again, ramped up. And banking stocks are the ones, especially the likes of HDFC and ICICI, are the ones who take the first knock, right? So you've seen already a 4 to 5% cut on some of these names. Now, what's interesting is that they've come closer to support levels, the respective support levels. So a rebound on both these names cannot be ruled out. Also, Bank Nifty, incidentally, has gone into deep oversold territories as per the PCR, which is now close to 0.5. And, 0.6 is the threshold where you start considering, oversold, but it's at 0.5. So, a mildly positive view on IT plus a Bank Nifty rebound because of this oversold nature could actually, help the rebound trade on the Nifty that we just spoke of. So on Bank Nifty also, as long as the 50,800, 51,000 zone is held, I would play for a rebound trade here as well for targets of 51,800 and 52,500. So both these indices playing for a rebound trade. Now, as far as stock-specific action goes, a long and a short given the texture of the market. Orion Pro, this is one stock that's had a good run over the last couple of sessions. Yesterday, the closing was if you see, down by about 0.3%. But if you look at the intraday move, then there was a very big rebound from the lower levels. And the volumes, both the days, yesterday and day before, have actually been, quite high, significantly higher than the averages. So Orion Pro for targets of 1910 and 1970 with a stop loss of 1810. On the short side, I've got Concor. The stock continues to reel under pressure, hasn't really seen any kind of a meaningful rebound. Yesterday broke below the support zones as well. So Concor December futures can be considered as a short sell for targets of 778 and 769. 799 is the stop loss.
So actually, Chakri, can I bring you in on Concor? I don't know if you track it or no, but I remember this because 6, 7 or 10 days back, Goldman Sachs came out with a note saying that their target is 710. But independent of the target, the rationale was that at the current valuations then, which was at 825, 830, what have you, Concor was more expensive than stocks like Adani Ports as well. So why would investors be in a Concor and not be in some of the private names which are well managed, etc.? I'm just trying to understand. It's corrected a little bit. If you had investments in this PSU, would you get out of Concor or would you stay invested?
Okay, in terms of Adani Ports, clearly, it is the market leader. Revenue growth is very strong, 25% plus. Earnings growth is even stronger. And, it's pretty much the de facto leader for which for the trade for both imports and exports out of the ports. Now, Concor, on the other hand, has taken steps in doubling its capacity. They're having these double stack trains, as well as the golden quadrilateral improvements have been made. So all the surrounding infrastructure that is needed for Concor's growth to accelerate is happening, but happening at a far slower pace. Second, there was also this huge talk about at some point Concor being sold, privatized, etc., and that hasn't happened. That has put a lid on the valuation multiples from re-rating. Third, the growth has not yet picked up, which is partly reflects, or rather a good part reflects the economic slowdown. And the combination of all these three factors, I think Concor still is, though a cheap stock, it doesn't have any positive fundamental catalysts.
Waaree Energies, we're at that time, I think just a handful of trading sessions left before we jump into 2025. Are we at that time of the year when we look at what the big themes are, and would alternate energy, green energy, solar energy definitely be one big theme for you? Will Waaree come in that list?
Thinking about what's going to happen in 2025, with, again, the favorite word of the year has now become Trump, I guess. And, there is going to be some rejig of multiples lower towards green energies because it's not so high on the Trump agenda, and unlike the previous administration. I think, all green energy stocks, growth rates domestically will be fine. Companies which have an export order book, especially in the US. I think there'll be some amount of multiple D-rating that will happen because there's not such a big focus of the Trump administration.